And this video is going to be about Medical Properties Trust, its ticker MPW, and what it's a little bit of a special situation, I would say. What their valuation is going to be after the properties that they own are all fully stabilized. They'll be towards the end, fourth quarter of 2026. They've had some issues. They were a little over concentrated in some. They rent out hospitals, and they were too concentrated with a couple of their biggest tenants, and both of them ran into issues related to that they were owned by private equity. They had too much debt, COVID, lots of other things. But anyways, they both ended up declaring bankruptcy, and that's all getting sorted out. There's new tenants going in. Some properties were sold. They made a lot of big movements, and now I have been invested in this for a while personally, but I kind of wanted to wait for things to get a little bit more sorted out to make a video on this. But this is in millions, but I think that once everything's all stabilized, so this would be 2027 would be the first full year that they'd get this, but they get about 1.1 billion worth of rent coming in. That's all triple net lease, so the tenants take care of everything with the property. They pay the insurance, the taxes, the maintenance, everything. And I have two different cap rates, one 7%, 6%, and this would be the total property value. They do have about 8.5 billion worth of net debt after you figure in the cash on hand they have, and there's about 600 million shares. So if you get at a 7% cap rate, which I think it totally depends on what interest rates are going to do in the next year or two, but I think 7% cap rate's going to be pretty conservative in my opinion. $12 a share, and at a 6% cap rate, which interest rates probably would have to come down a little bit or for that to happen, but that'd be more like just a little bit over $16 a share, and right now trading in the $6 range, maybe a little bit under. I haven't looked since the market opened this morning, but they did just get an upgrade. Everybody thought that, they're going bankrupt, blah blah blah. It just not true. That these properties do have real value, and you got to get new tenants in there. And now that that's all squared out, they worked out agreements for, hey, this is when we can collect full rent from you and all that. Everything, they could run into small problems. Now that they're not as concentrated, they could run into a tenant or two having this issue in the future, and maybe the number doesn't get quite to that point. But I think in that vicinity seems reasonable to me. When I originally bought, I thought 12 to 15 within 3 to 5 years, and I've been in for a little bit over a year. And it seems to be playing out just like I thought. The dividend is temporarily low. I think as the properties move forward in the stabilization, they did an initial period with no rent, and then they're kind of ramping up to the full rent over the next year and a half. So as things ramp up with that, they return back to somewhere around the previous dividend, which was a little bit over $1 per share per year. And have to determine if that's right for you, but I think for people that are looking to get in something that's very undervalued and could potentially bring in good passive income in the future, which is kind of what I'm looking for, could be worth doing more information checking on your end, and I would look at the annual reports and see what you come up with.